Thursday. What could I say? Anyway, it is Thursday. So happy it's Thursday. Don't you love a good acronym? So, I want to talk to you now about Bitcoin and crypto supply shocks. And this might come as a bit of a surprise, or maybe not. Depends on whether or not you've been paying attention to things like the supply of various cryptocurrencies. So, if you're aware of how Bitcoin works, then you'll know that its supply is slow and steady, and that it is mostly mined at this point, and that its supply increases at a very well-known, calculable, measurable, observable rate, right? Every 4 years there's a halving, and the supply that is produced new is cut by half. That's why it's called a halving. The same, by the way, is true for Litecoin, which is another decentralized cryptocurrency, which is basically like Bitcoin's little brother, or a sandbox where they do a lot of testing on whatever is going on with Bitcoin to make sure it's running right on Litecoin first, and then if it is updated into the Bitcoin Core code, and that's one of the main purposes why Charlie Lee created Litecoin in the first place. And the supplies of Bitcoin and Litecoin are well known. The max supplies are well known. The rate of creation of new coins is well known. The method of creation of new coins is well known. It's done through mining and proof of work. Basically, those are, veritable cryptocurrencies that are decentralized and true to their values of being decentralized cryptocurrencies. Now, there are other altcoins, of course, millions of them, and many started as proof of work, but have switched over to proof of stake, namely Ethereum, which used to be created by proof of work, and now has switched over to proof of stake in the last couple of years. And that has, of course, brought on more issues. There is no cap on the total possible supply of Ethereum, at least not yet, and there probably will never be. It inflates at certain rates, but it is not as consistent as Bitcoin, especially now that it is proof of stake. Now, there are obviously other coins, Solana, XRP, any millions of other coins that have a different way of creating coins. XRP for many years was, had already created and distributed 90 billion coins or something like that, 80 billion coins, and the creators of it held the significant majority. And through a certain scheme or model, they distributed billions and billions of those coins into the marketplace. Yet they still hold a significant portion of them. So significant that it can cause a different type of supply shock, which is when the supply is massively increased, even on regular cycles. Well, it has a tendency to not be met with a matching demand. And that is one of the obvious reasons when you look at the laws of supply and demand, Basic Economics 101, that XRP's prices have never seen the highs that they saw back in 2018 when it was like $2.47 or whatever the high was. It has been years since it nearly went up or was heading that way again, but it has never regained the highs that it had back in 2018. Solana, a centralized coin, arguably not a 100% true cryptocurrency in that sense, since it is centralized, has also a different method of creating coins and distributing coins and putting coins into circulation. This also creates a different type of supply shock, and also is met sometimes with a lackluster demand. Solana also has not seen the highs that it had back in, I think, 2021, when it was around $260. It got pretty close this year in March, when it was up at around $209. But since then, it has come down significantly to the 130, ranging between $120 and $150. But having come down quite significantly. As last I looked today, it was around 135 bucks. So these kind of pullbacks, drawdowns, whatever you want to call them, are to be expected when you have an oversupply and a lackluster demand. The same is true for practically every other cryptocurrency that does not use proof of work or uses a different model to create their coins in order to either pay for their company expenses or what have you, right? Pay off early holders, whatever it might be. And we see that the supply shock, the market. Now, obviously, as a low time frame VEPS trader, I look at the volatility, the entropy, the probability, and the statistics. And honestly, big picture macroeconomics rarely come into play. Except for, of course, they paint a broad brush, big picture for what's going on in the macroeconomic sense. So things like supply and demand definitely matter. But they don't matter in terms of low time frame trades or scalps, obviously, because, well, that's just not a factor, right? But what is a factor for broader, longer term holds, investments, what have you, are things like the supply and the demand. And it would be foolish to completely ignore that, especially if you are in fact holding any of these coins. That's why personally, I prefer, if anything, to hold Bitcoin or Litecoin or things that have a well-known max supply, a well-known production rate, a well-known production method, a well-known decreasing rate of inflation. You might call it a deflation rate, but it's not really technically deflationary until it is actually dropping in its supply meaning producing negative supply. And well, it isn't producing negative supply, obviously, until it's completely, minted out or mined out, and then people start, losing them. But we've already had people losing them, and that's one of the good reasons why you can argue that it is in fact deflationary, since nearly a quarter of all coins are presumed to be permanently inaccessible on Bitcoin because people have lost access, or they've sent them to invalid addresses, or they've sent them to addresses that are inaccessible, etc. And so, if you are a trader, again, of low time frame volatility, entropy, probability, and statistics, it behooves you to basically disregard the news, but still be aware of the longer term implications of the tokenomics, if you will, the economics of the given asset you're interested in trading or investing in. And to bear in mind that there's no shortage of coins that are basically playing this game of manipulating the supply for whatever reasons. Again, it might be that they're paying their bills, it might be that they're looking to raise money, it might be that they're looking to invest in new developments, scale up their operations, reach new markets, onboard new users. There's a whole massive wide host of reasons why companies do things in order to raise their available capital. And increasing supply is one of the ways that they can do that. And if you look at the supply charts of various coins, you'll see exactly how and when they do that in terms of when they create more coins and distribute them. You can see a number of these charts on TradingView. But again, as a trader, we really don't care about what happens on the big picture when it comes to low time frame trades, because what matters to low time frame trades very specifically is the volatility, entropy, probability, and statistics. And everything else is just kind of commentary. It's noise in the peanut gallery. It can be largely ignored. And I say that with high confidence and low uncertainty because that's exactly the point of trading volatility, entropy, probability, and statistics. By the way, funny emojis in the chat, thank you. So I wanted to bring that to your attention because I see a lot of people wondering, why doesn't the price go up? Well, the price doesn't go up because of the VEPs, short-term and long-term. But things that affect it, that are real things that affect it, and not news headlines or reports or analysis by so-called experts, what actually affects it are things like supply and demand. Those are real market forces that actually affect and impact the economics of an asset. It doesn't matter if that asset is a cryptocurrency or a traditional market asset. Supply and demand impacts the potential for price action to go up or down or sideways. And we see a lot of that happening in the crypto space. And that is why for months I've been telling people, since the highs, we're very likely to see a prolonged period of sideways action and even potentially downward action, even after the halving. And it's been like 102 days now since the high on Bitcoin, and it's been, you know, like a couple months, even more, like 2 months and a week since the Bitcoin halving. And we're likely to see that continue to grind out until there is a rebalance, a reset of the VEPs. That's it. Happy trading.
Father.